If you want to make profits like this from trading crypto, stocks or forex, you definitely need to learn the strategy I'm about to show you in this video. This strategy is highly efficient and simple at the same time so that even a beginner can use it. It consists of only 2 technical indicators and a smart money management approach that aims to maximize the profits on every single trade you take. I will also backtest the strategy 100 times so that you can see the real metrics behind it. Okay, without further ado, let's get into it. Okay, so the first thing you want to do is to go to tradingview.com and open the charts. Next step will be to set a time frame to 15 minutes. This strategy works well on all time frames. You can even use it on a 5-minute chart. Once you selected the time frame, you need to click on the indicators tab and search for the first indicator, which is called triangular momentum oscillator. Select this indicator by Lux Algo. And for the second indicator, you need to add an adjustable moving average. It's going to be this one by Lux Algo as well. Now let's double click on the adjustable MA, and in the input section let's enable the smoothed candles. The length on a triangular momentum oscillator is going to be set at 7. Alright, now let's understand how these indicators work. First, let's start with the TMO. This is going to be our main confirmation indicator. Based on its signals, we're going to be placing buy and sell orders. The following oscillator is based on the momentum of a triangular moving average, hence the name triangular momentum because of the very smooth property of the triangular moving average. This indicator is used to detect divergences. The divergences detected by the oscillator are regular divergences where the oscillator leads price variations. A bullish divergence occurs when the price action is making lower lows but the indicator is making higher lows. Once such divergence has been identified, the indicator issues a buy signal. For a bearish divergence, the price action is making higher highs and the oscillator is making lower highs. Once a bearish divergence has been identified, the indicator issues a sell signal. This indicator can also be used without divergences. Basically, when the indicator turns from green to red, this is a signal to go short, and vice versa for long positions. However, I don't think this is the best way of using it because the indicator is lagging. Okay, now let's understand how this adjustable moving average works. The following indicator puts more emphasis on its alternating extremities. An upper extremity will be shown once the high price crosses the upper extremity, while a low extremity will be shown once the low price crosses the lower extremity. Generally speaking, when the price action is in an uptrend, an upper extremity, which is this green line right here, will be shown on a chart. Also, the smoothed candles will be increasing in value. On the other hand, when the price action is in a downtrend, a lower extremity will be shown on a chart. And the smoothed candles are usually decreasing in value. It's very easy to spot a range in market with this indicator. Notice when the volume in the market is low, the smoothed candles are barely seen. So it's very important for us to keep an eye on these candles because they can eliminate a lot of potential losing trades. So now you know how these indicators work, let's now understand the rules for our trading strategy. So here are the rules for entering a long trade. First, we need to have a new buy signal issued by the triangular momentum oscillator. Second, the upper extremity must be present on the adjustable MA indicator. As we already know, the green line confirms the uptrend. And the third condition is to have these smoothed candles increase in value. Here we can see that the candles started increasing in value. So we're gonna go ahead and place a buy order at the close of the trigger candlestick. The stop loss will be set at the recent swing low. For this strategy, you're not going to set a specific take profit target. You're basically going to exit a winning long trade either when the oscillator issues a new sell signal or as soon as the lower extremity, which is the red line, appears on a chart. As we can see, the red line appeared on a chart and the trade is running in profit. So this would be a valid signal for us to exit the trade. If, for example, the oscillator issues a new buy signal, but the moving average is red color, the signal automatically becomes invalid. Okay, let me give you one more long example. So first we're looking at the oscillator, we see that I found a new bullish divergence. The adjustable MA is green color, and now we're going to be waiting for these smoothed candlesticks to increase in value. Here we see the moving average turned red and the trade is running in profit. So this would be a valid signal for us to exit the position. For short trades, the rules are exactly opposite. First, the oscillator must issue a signal to sell. Second, the moving average must be red color. And the third condition, the smoothed candlesticks must be decreasing in value. As we can see, the candlesticks started decreasing. The stop loss will be set at the recent swing high, and we're going to exit a winning short trade either when the oscillator issues a new buy signal or as soon as the moving average turns green. Here's one more good example for a sell entry. So the oscillator found a bearish divergence and the moving average confirms the downtrend. So the last thing we need to do is to wait for these candles to start decreasing in value. As we can see, we just got a confirmation. Okay traders, I hope the rules for the strategy are clear. Now let's move on to the backtesting with the goal to find the real win rate for the strategy. I just finished the backtesting and after 100 trades, the win rate for the strategy turned out to be 74%. This is definitely really high for a 15-minute scalping strategy. The profit and loss is also looking pretty good. The profit factor is 4.16 and we had 12 consecutive wins against 3 consecutive losses. And the maximum drawdown does not exceed 4%. The average win was 2.92%. This number will fluctuate depending on the market conditions. So overall, I'll give the strategy a score of 9 out of 10. If you have any suggestions on how to improve the strategy, please let us know in the comments. Okay traders, I'm off, thanks for watching and see you in the next one.